when we reflect on this period of time, we probably didn't need as much hikes as we did. But what happened is you had central banks fighting with governments, if you will, whereby governments continued to have excessive fiscal policy that drove inflation far higher than it needed to be post-pandemic. And therefore, this is going, I think, to lead to some challenges next year as we see inflation fall rapidly and we are stuck at still very restrictive levels of inflation. So I don't think the market is incorrect by thinking about cuts next year. And I think that it's been our view for some time that timing these things is a bit of a mug's game. I'll be totally frank. Like the expectations for cuts throughout this year have been quite all over the place. I mean, the market was expecting massive cuts last June after the regional, the various U.S. banks fell. But I would say that when cuts come, they'll be fairly sharp. I don't think, a trimming here and there is really going to be what the story is. I think it's going to be a pretty sharp cutting cycle as we start to deal with an economy that just can't operate at 5% money.